Is Nigeria really the giant of Africa?
No, we are not. No. Wow. Once you step into a country like Kenya or South Africa, they will see that Nigeria is a joke. The simple solution to this debt problem is we need to hire a CEO like-minded, a CEO kind of leader. Because it can be done, right? We've seen different kind of...
How?
I really don't know, honestly. I wish I knew. If I knew, I would be running for the government. Or for the president. Inflation is extremely important. I was watching a movie.
Okay.
A movie that is shot. It was backdated to the 1800s American frontier, right? And someone was saying that let's go and rob a bank. I'll give you $5,000.
Okay.
The guy was like, $5,000, that's a lot of money. He was so excited. Right? Today, $5,000 is a lot of money. If you have $5,000 today living in the US, yeah, you have a lot of money. It's very difficult governing Nigeria, to be honest. Nigeria is a very complicated state. So if you are saying that someone can do this, someone can do that, it's probably because they've not been there. Buhari's government, let's call it a spade, was very lazy when it comes to generating revenue. Nigeria's equities market right now, there are only a number of names that you can invest in. If you invest in macro, you will hate investing in Nigeria, right? If you take away them Dangote, take away them Nestle, take away the banks, that's it. You've almost exhausted the entire market. I mean, think about it. Last time we did any major project in Nigeria was Third Mainland Bridge.
My God.
Okay, maybe
1992.
There was second Niger bridge in the east. Yeah. Thankfully, Dangote refinery is here already.
I was going to take you on that.
Hopefully, yeah.
I'm just going through the figure. Yeah. 650,000 barrels per day.
Yeah.
What can you do? What was the prospect?
No, you can do a lot.
Okay.
600,000 barrels per day converts to almost 120 million liters of fuel, of white products.
Wow.
Per day. So what that technically means is that Dangote can potentially supply the whole of Nigeria's consumption and also export the balance. That's why...
And you are now about to feel the strength of street knowledge.
Would be analyzing the economy, and trust me, I have no other person to do a perfect job to the analysis than the man, the myth, the legend, Mustapha Wahab. Give it up for Mustapha Wahab, guys. If you've been watching the TV, you would have probably seen this man appear on your screen on BBC, on CNBC, on Arise, on channels. He's the Wall Street person here with me, and what we'll be attempting to do in this video is to bring the Wall Street down to the main street. We will try as much as possible to decouple and to demystify the economy into easy beats for you. Mr. Wahab, nice to have you here. And I will start straight off from the exchange rate crisis we are having in the economy here in Nigeria. And let me just take you back to 2019. That was the first time I had real experience with dollar. I wanted to exchange $200 and I went to all these bureau de change guys. I gave them 76,000 naira. I can remember the exchange rate then was 360 naira to $1 in 2019. I was exchanging 72,000 naira. It was so bulky just to collect 2 pieces of $100, right? But fast forward to 4 years later, even 5 years later now, that same exchange rate has skyrocketed from 360 naira per dollar to about 1,400 naira per dollar. What do you have to say about this? Could there be a way out of this exchange rate mess?
I think I sort of understand what you mean. I was there too in 2019 when Nigerian economy was a lot more stable compared to what we've seen in the last couple of months or years, right? And the reason is very simple, Wally. Nigeria's macro landscape, macro economy is actually too exposed to external shocks. What that means is that in layman terms, it only means that we only export one single product, which is crude oil. Okay. And so when we sell crude oil, we get FX from the international market, and that is how we supply the domestic market as far as dollar supply is concerned.
Okay.
However, once you see challenges with either oil price or oil production or both, you will see the impact on Nigerian economy almost immediately, right? Between 2018 and 2020, prior to COVID that you just mentioned, crude oil price averaged roughly around $70 to $80 per barrel, and we're doing up to 2 million barrels per day. So the impact of that just basically means that the central bank could easily supply the markets easily, no issue. And beyond that, global macro is also quite stable. And we're also able to explore the international markets to access the Eurobond market. I think I remember in November 2018, we did almost $2.5 billion in Eurobond that we raised in 2018.
Okay.
We did another 1.5 billion in 2019, right? So that's why we got that stability. You remember that between 2018 and 2020, exchange rate was hovering around 358 to 360. In fact, if you remember, Oli, Bureau de Change was selling exchange rate a lot cheaper than what you will get in the bank.
Right.
Bank will give you almost at 362. You get it at the parallel market at 358, right? So I remember that was one of the first time I traveled. Actually, I went to Kenya. I didn't even need to go and fill Form X or what do you call the form again? I think it's Form A.
Form A.
I didn't need to go and fill Form A at the time because it makes sense for me to get the dollar at the parallel markets than to go to the bank. So fast forward to 2020, we enter COVID period, oil price collapse, and then everybody saw the impact.
Right.
So what I'm just saying generally is that we are too exposed to the external market. That's the reason why you are seeing this massive wave of volatility. And so to answer the question whether or not we are going to see solution to this thing, I don't see it coming.
You don't see it coming?
I don't see it coming.
Why? Why do you say so?
Wally, if you have the opportunity to buy dollar at 1.4 right now, I think you should buy it. Right. We've not even.
Wait, are you saying you don't see the exchange rate correcting?
Appreciating? No.
Wow.
No. Even if we see, this is not to say that we won't see stability for 1 to 2 years. No.
Okay.
I mean, I recall that the CBN is already speaking to World Bank. They were going to get 1.5 billion.
Yeah. They also want to raise Eurobond.
Yeah.
Later this year.
Yeah. So the thing is, all of these things, I would like to put it in context to you. Imagine we get 3 billion, Wally.
Okay.
Imagine we get 3 billion. The last time I checked the number, parallel market alone, BDC supply, when the CBN was still supplying the BDC, got almost $300 million on a monthly basis.
Okay.
Right? So if you sort of analyze that money, what it means is that 3 billion would be exhausted almost in 1 to 2 years, right?
Okay.
And beyond that, also think about the fact that we still have almost 7 billion in backlogs.
Yes.
Right? Even that 3 billion really cannot even clear the backlog that we have. Right. So this is just the short-term solution. Yes, Tinubu's administration is doing a lot of policies, trying to bring in foreign investors. But what we need to solve the exchange rate problem is not really FPI.
Okay.
Right. What we need is FDI, and we need to correct our balance of payments. Just to make it short, we need to diversify export base. There is no other alternative. Trust me. That we need to show the international market that we can sell something to them. If you can't do that, trust me, every 1 to 2 to 3 years, we'll be seeing exchange rate shocks. And so 1,400 is just the starting point. We're not even there yet.
Okay, Wahab, let me just take you on that. All right. So we've seen government, making policy statements saying they want to attract FPIs into the economy. They want to resort back to all these orthodox monetary policies, increasing interest rates, doing more of OMO auctions, and, trying to attract foreign investors by hiking interest rates so that, yields on your debt instruments would also, go up. And the Minister of Finance also appeared on Bloomberg some time ago, and he said, okay, the country is looking to get aids from the World Bank, and they are trying to raise Eurobond also. Are you saying all these initiatives won't solve that? Number two, okay, you said the economy, we rely on one essential product, and that is crude oil. And crude oil is doing about $79 per barrel currently in the international markets. Okay, so for example, hypothetically, if crude oil price goes to a $150 per barrel, are you saying that won't still solve the problem?
Well, those are excellent questions, and I'll try to answer them in bits, right?
Okay.
So the first one, they want to attract FPI, fantastic initiative. They want to raise zero bond, an amazing initiative.
Okay.
But Wale, it's expensive.
Right.
It's ridiculously expensive. Yeah. So you're a foreign guy. I mean, I speak with a lot of them in South Africa, in London, and in New York. You come to Nigeria with $100 million. You want to buy Omo. Omo instruments, the
Guys, OMO is open market operation. It's an
Yeah.
instrument the
Yeah.
CBN, the central bank, uses to mop up liquidity in the system.
Yeah.
You know, in order to bring inflation figures down. And we'll get into inflation shortly.
Yeah.
Continue, please.
So you want to buy Omo in Nigeria, for instance. The longest tenor for Omo is typically around 360 tenor.
Correct.
So you come here, right now, I think Omo on Nigeria's Omo yield, I'm not
It is
sure, I think
17.75 at the last auction.
Oh, fantastic,
Yeah.
17.75.
Yes.
So what that then means is that if you lock in at one year Omo, you will get 17.75
Correct.
at the end of the year, and then it means that you'll be leaving the country with more money that you came with.
Ideally.
And guess what? You're not even staying for too long.
Correct.
Think about FDI. FDI, it's a much more patient investment. You come to the country, you go to what do you call it, CAC, you register your business,
Okay.
you hire Nigerians, you bring in your portfolio. You will probably not exit until you hit positive bottom line, and then that's when you now start to think about recuperating your dividend.
Okay.
Right? So it's a lot more patient and it's more beneficial to the economy, and it's cheap. Right? Nobody needs to pay them any interest for them to take the money out. Eurobond, same thing. I mean, you probably ask me question about debt later.
Right.
I mean, we're already almost overstretched when it comes to debt. Think about taking another extra Eurobond. That's too much.
Okay.
Yeah. So these monies, beyond the fact that they're expensive, they also don't stay for too long. In 1 year, 2 years, at best, a foreign guy will roll over his instrument over another 1 year or 2 years and then exit the country. So you will be back to where we're coming from. It's not like they've not done it before, Wale. You and I were here in 2017 when Emefiele was giving yield in an insane manner, right? I was speaking to one foreign portfolio guys. He was telling me that the amount of money he has made in Nigeria, he feels sorry for Nigerian government. Like he's almost weeping for them. Right? So he's made so much money that he's weeping for Nigerian government. So
What about the second one?
the second one,
Crude oil price touches $150.
do you want to rely on crude oil price? Do you want to? In fact, Nigeria's oil and gas ecosystem is not even reliable in itself. Shell just announced that they are selling their onshore assets. Right? Foreign guys are leaving the country already. And the reason is very simple. Shell is leaving onshore operations because of theft, vandalism. It's expensive, to operate in Nigeria. And if you check Nigeria's budget now, you will see a lump of very sizable money that they are using to support the Niger Delta and also this NDDC commission, right? So once, if any new administration come in or Tinubu just wake up one day and yank off that money from the budget, or they are not paying, we start to see another what do you call it? Vandalism, oil theft in Niger Delta. So you don't want to rely on it.
All right.
So oil price could be $150 per barrel. If production is not doing a lot, then you are not making any gain from it. Finally, higher oil price also means higher refined products.
Correct.
Yeah. And I mean, technically, they've yanked off subsidy right now. So if you want to take oil price to $150 per barrel, the implication is that you are going to be paying a lot more as far as PMS price is concerned. So horrible.
Correct. All right, Wahab, let's go back to 2020. The world entered COVID, and most central banks, they started hiking rates. Right? And Nigeria also did the same thing. We've been hiking rates. And Wahab, between February of last year, 2023, to December, our inflation rate, increased 11 consecutive times, right? Interest rates before they started hiking rates was about 11.5%. It's currently at 18.75%. But these other countries are hiking rates, the US, the UK, Switzerland, all these developed countries, we started seeing the impact of those rate hike on their own inflation figure. But in Nigeria, as we currently speak, inflation rate is at 28.92%. It's almost touching, 30%.
Yeah.
I remember a few years back, if I want to make a bowl of soup, I barely spend 2,000 naira. But currently, I can't even spend 5,000 naira to make a decent plate of soup.
Yeah.
What exactly is wrong with Nigeria? Is it that the interest rate is not addressing the issue of the inflation we are having here,
Yeah.
or there's something we don't just seem to understand?
Yeah.
What's happening?
Okay. So in economics, there's what we call monetary policy transmission mechanism, right?
Wow, you would have to. Wow, you would have to break it, like pieces it.
Yeah, I would try to explain as best as I can. Transmission mechanism means that how how a particular country's macro respond to monetary policy rate hike or rate cuts.
Okay.
Right. It works in the developed market. It doesn't in Nigeria. For a lot of reasons, right? So let me give you an example. In Canada, I think about 11% of their GDP composition is real estate.
Oh.
Right? And I was looking at CIBC, one of the largest banks in Canada.
Okay.
I was looking at their loan portfolio, and almost 60% of the loan that they issue, it's a very huge bank. 60% of their loan book is to mortgage.
Wow.
Right? So, and mortgage in Canada always resets every 5 years. Interest rate resets every 5 years. It means that after 5 years, you have to renew your contract based on the prevailing interest rates.
All right.
So when the bank hike rates, you will see the impact on the domestic economy almost immediately. Almost immediately. And immediately means that once they hike rates, the mortgage payments will rise. And if you are earning, say, $2,000, for instance, and you are paying a portion of it as mortgage, if you have to raise your mortgage, you have to pay more in mortgage. It means that you have less money for other consumption. You have less money to save. You have less money to consume. So what they are basically doing is that once they raise rates, the idea is for them to stifle the economy. They want people to have no ability to spend.
Okay.
They want people to go broke. And they are going broke at the expense of maintaining inflation at the level that they want it to be. And I'll explain why inflation is extremely important, Wally. Inflation is extremely important. I was watching a movie.
Okay.
A movie that they shot. It was backdated to the 1800s, American frontier, right? And someone was saying that let's go and rob a bank. I'll give you $5,000.
Okay.
The guy was like, $5,000, that's a lot of money. He was so excited. Right? Today, $5,000 is a lot of money. If you have $5,000 today living in the US, yeah, you have a lot of money. Right? Wow. So what they've been able to do is that they've been able to keep inflation as low as possible, because higher inflation means weaknesses in exchange rates. You get? So that's why inflation is important to them. And that's why they also need an independent central bank. Politicians everywhere, not just in Nigeria, they hate hiking rates. If you remember when Donald Trump was in office, he was always shading the Fed that they don't know what they are doing, because politicians want people to have good view of them. They want people to feel like they are not impoverished. But central bank doesn't care. Central bank needs to put people out of employment for them to maintain inflation, whatever it takes. They don't care. That's why they've been able to maintain their currency at the levels they are, because inflation has been lower for a long time. Nigeria hasn't been able to do that. And that's another reason why currency would continue to depreciate. Right? Inflation has stayed at double digits for too long. Right? And the way we value currency is that we always look at, we benchmark Nigeria's inflation versus US inflation, and we look at the differential. The bigger the difference in inflation, the more the exchange that you have to give to make up for that difference, right? So if US inflation is shrinking and your own inflation is rising, trust me, the immediate implication is that exchange rate would continue to depreciate. You get? And
Sorry, you lost me.
yeah,
You said if US inflation is shrinking, your own exchange rate.
inflation.
Is it inflation or exchange?
Inflation. I meant inflation.
Okay,
Did I
your-
say exchange rate?
I thought you said
I
it.
said inflation.
Okay.
So we're
Okay. Inflation versus inflation.
inflation versus
Okay.
inflation.
Okay.
US inflation, Nigerian inflation. If inflation in US is staying at a very low level,
Okay.
and Nigeria's inflation is expanding, the implication is that exchange rate will depreciate.
Okay.
That's why it is extremely important for any central bank to curb inflation. In fact, the only fundamental core objective of the US Fed is to maintain inflation at the levels that is at the natural rates as we learn in school. Because you can't do anything about natural rates. You have to leave inflation at that level, right?
Sorry, it was natural.
Natural rate of inflation is that small inflation that you need to
Like
oil
the 2%, like
that 2%.
most central banks set
Exactly.
target. Okay.
That's the target. You need that 2% because reverse the idea of inflation, because inflation is that your money is not buying a lot more as it used to buy.
Correct.
But that's because you are a consumer. Think about a producer. A producer wants to be able to raise price now. If he's not
Correct.
raising price, if he's not making more money, there's no incentive for investment, right?
Right.
So inflation needs to be a little bit 2%, 2.5% level so that people are incentivized to invest in building capacity, right? That's the natural rate of inflation. So Nigeria has not been able to do that. Inflation has stayed for double digit for too long, right? And the structure of Nigeria's economy too is not helping matter, right?
Sorry, in what way?
From food inflation point of view,
Oh,
insecurity issue is
Correct.
a problem in it. No amount of interest rate hike will solve that problem. Perennial, persistent flooding in the food basket of the federation. No amount of interest. There's no way you raise interest rates that will reduce the price of garri in the markets. You know, that's the short that's the short way to put it, right? So, beyond central bank, fiscal policy needs to do a lot to address the issue of inflation. It's not a job of the central bank alone. The Nigerian Tinubu's administration needs to do a lot. They need to invest. You and I have discussed this thing, I think, years ago. Infrastructure is extremely important. If you don't have
Correct.
infrastructure, you would also be facing inflation issue. If you go to London, Wally, their transportation system in London is insane.
wow.
Is insane. Train gets to almost they have different lines, right? They have the Piccadilly, they have the underground, they have the overground, they have Jubilee line. It's anywhere you want to go in London, you get there via train. And beyond train, they also have alternative buses. And these are some of the ways these guys move goods and services across the nooks and crannies of the federation. That's why
Wow.
inflation has been able to maintain that low level.
A single digit.
Single digits level.
Wahab, sincerely, I can't agree with you less. Because here in Nigeria, insecurity is a big issue.
It's a big
You
challenge.
just mentioned that in London, like they have all these, road connection that moves you from point A to point B. You'll probably get to your destination in one single pace.
Yeah.
But here, from Abuja, the capital city of the federation, right? You can't even move from Kogi to Abuja with your two eyes closed.
Yeah.
The
Have
rate
to be
of
vigilant.
the rate and speed of kidnapping is unprecedented.
Yeah.
We've not seen anything
Yeah.
like this before. I don't know. Maybe people are now going for coaching, for seminars on how to kidnap, because it's the audacity for me.
Yeah.
Like, we see people racing, GoFundMe just to pay ransom for kidnap victims.
Yeah.
Right. So that my point is security. I think it's a no-brainer.
Yeah.
From the fiscal part, by the way, the fiscal part, we are talking about the executive government, not the CBN that handles the monetary side. Okay, they have to address that issue because farmers can't even go to farm.
Yeah. So Wale, it's not like I am completely spiting the government.
Okay.
Honestly, I do not envy people in power right now.
Wow.
You just
Why do you
mentioned
say that?
because it's very difficult governing Nigeria. To be honest, Nigeria is a very complicated state. So if you are saying that someone can do this, someone can do that, it's probably because they've not been there. And if you've been there, you will see the kind of hard choices that you would have to make. Now you are highlighting security. Is that the only thing we need? Health,
Nah,
education.
correct.
These are some of the things that support macroeconomic fundamental. And if they're not there, there's absolutely nothing you can do. Right? There's
Correct.
absolutely nothing you can do. So a lot has to be done. And really, I don't even know where to start from. Security is extremely important. So is education. So is health. So is defense, anything.
Power.
Power. Right? So if you don't have any of these things, it's difficult to govern it. It's difficult to even say, I want to raise rates. What exactly are you raising rate to?
And what effect
What
would it have on
effect are you
inflation?
even expecting it to have on inflation when you have
Correct.
security problem?
Correct.
Right? So when you are criticizing the CBN governor or the president, you just sort of have to understand that they are facing a lot of difficult choices with very limited resources, right?
But is that not the work like they signed up to do?
Yeah,
Like, I'm
yeah,
just-
it is.
Wow, wonderful insight. Like, I think I've learned a lot from this engagement with you. I don't know about you, but trust me, my head on full. What exactly do you think we can do about this issue of debt? The current debt stock of the country is about 88 trillion, right? And I don't think we can continue like this, because the way I see it is more of, you are doing more of debt but little of revenue. At what point are we going to say, okay, it's enough, guys, we can't keep borrowing?
I guess this is where the issue of CBN's independence or central bank independence come in, right?
Okay.
I think Buhari's government, let's call it a spade, was very lazy when it comes to generating revenue, right?
Okay.
If you're a CEO, Wale, you were hired. Your primary responsibility will probably be to obviously grow revenue for the company, grow
Correct.
profitability for the company.
Correct.
But I think Nigeria's economic manager don't think that way. They don't think that they need to bring out initiative that would ensure we generate revenue. And so they see a very easy, lazy way of making money. And so they go to the CBN. They want any infrastructure project to be done. Go to the CBN. CBN prints money on their behalf, and then they use that money to fund fiscal projects. That's if they use it to fund fiscal projects. And if it is not for recurrent expenditure, right? And this is one of the biggest contributors to Nigeria's inflation drive. Between 2015 and 2023, that was one of the biggest driver of our inflation, right?
Wow.
Yeah. So the simple solution to this debt problem is we need to hire a CEO like-minded, a CEO kind of leader, because it can be done, right? We've seen different kind
But
of.
how?
I really don't know, honestly. I wish I knew. If I knew, I would be running for the government. Or for the president. As an analyst,
Okay.
we've written a lot of report about how they can generate non-revenue. Right? Obviously, because I think only 20% of Nigeria's adults pay taxes. Tinubu has proposed that kind of policy, and he has a good track record when it comes to generating revenue, especially for Lagos State, right? Widen the tax base, and so that you're able to get more money as far as tax is concerned. But the government also needs to do a lot more to thinking of different ways to generate revenue. If you don't generate revenue, what you'll be resorting to is borrowing. And when you borrow, you are going to be facing a lot of pressure, especially when those loans mature. I've checked Eurobond maturity I think last year, I remember checking it. I think by 2025, about $1.5 billion will mature. And between 2025 and 2032, we are going to pay back almost $11 billion in Eurobond repayments, right? And these are the monies that we borrowed years ago. Right, these are problems for our own generation now that we have to deal with, right? And all of these things are happening because we are not generating enough revenue. When I say revenue, not just naira revenue, dollar revenue.
Okay.
We're not making money from dollar. We don't have companies that are generating revenue abroad and bringing it down to Nigeria, right? We don't have any. We only have some Dangote cement, Boa cement. I think Lafarge, they're exporting cement. They're making tiny little bit of export, but that's not enough. Some palm oil companies too are also doing the same thing. They're exporting rubber because we have huge amount of rubber production in Nigeria that they're exporting, but it's not enough. Thankfully, Dangote refinery is here already.
I was going to take you on
that. Hopefully, yeah.
I'm just going through the figure.
Yeah.
650,000 barrels per day.
Yeah.
What can you do? What's the prospect?
No, you can do a lot.
Okay.
600,000 barrels per day converts to almost 120 million liters of fuel, of white products.
Wow.
Per day. At 100% capacity, that's 600,000 barrels per day would deliver up to 120 million liters of white products.
Wow.
And compared to what we consume in Nigeria, I think last time I checked, we consume about 60 million liters. That's almost 2 times of domestic consumption in Nigeria. So what that technically means is that Dangote can potentially supply the whole of Nigeria's consumption and also export the balance. That's why, that's exactly why I was saying that, Dangote refinery is actually more or less going to change a lot of things as far as Nigeria's economic structure is concerned, right? And then...
will he not use the benchmark price now?
Of course now, you guys would have to pay the benchmark price. So we're talking about the macro. I'm not talking about micro impact.
Okay.
Micro impact, you're probably going to be paying a lot more for fuel. Right? But macroeconomic impact, as far as Nigeria's structure is concerned, Dangote is going to do a lot, right? I was going to mention that right now, although our balance of payments, that's export, imports, and services, is in surplus right now. I think because oil price is higher this year, last year versus what we've seen in the past. But if you check the composition of our import as well, almost 40% of Nigeria's import is importation of refined products.
So
sure. If Dangote can supply the market, if it gets to 100% capacity utilization by the end of this year, it means that potentially we can yank off that entire 40% of imports out of our balance of payment. That's an upside for Nigeria's currency. If you think about it that way as well.
Yeah.
And finally, is that you remember Tinubu's administration promised that they want to deliver $1 trillion economy.
Yes, in 7 years.
In 7 years. Dangote can also sort of help them. What I feel would happen between now and the next 2 years is that they will restructure Nigeria's economy's computation, the GDP, they will rebase it. Last time GDP was rebased was done in 2013. It was rebased.
Jonathan's period,
Exactly. So once they rebase to a new price, economic composition will grow. I think the last time they did it, I think GDP grew by almost 90%.
Wow.
Right? So we'll see that kind of growth as far as GDP is concerned. And all these tech guys that perhaps they've not been well captured in the telco GDP, we start to see them getting captured. Dangote refinery will be captured. So Nigeria's economy will probably be a lot bigger compared to what we're seeing today once that rebasing is done. So those are some of the impacts I feel like the refinery will bring on board.
Oh, thank you so much, Wahab. On a final note,
yes,
is Nigeria really the giant of Africa?
No, we are not. No. Wow. Once you step into a country like Kenya or South Africa, you will see that Nigeria is a joke when it comes to wealth.
Wow.
As far as African country is concerned, South African economy is huge and is well diversified.
Wow.
Yeah, is massive. I was in Cape Town last year, and I wish I was a research analyst in Cape Town because you would have a lot to do. Think of Nigeria's equity market right now. I know you don't do equity, you do FX. Nigeria's equities market right now, there are only a number of names that you can invest in. If you invest in macro, you will hate investing in Nigeria, right? If you take away them Dangote, take away them Nestle, take away the banks, that's it. You've almost exhausted the entire market, right? But if you go to a market like Johannesburg Stock Exchange is almost, I think, 5 to 6 times bigger than Nigeria Stock Exchange, if not more, sef, right? So when you say Nigeria is a giant of Africa, I don't know the kind of metric they're using to measure it. But infrastructure-wise, South Africa beats us hands down. Kenya is doing a lot more than what we're doing right now, infrastructure-wise. People have gone to Abidjan. I haven't been to Abidjan before. People have been to Abidjan and they could attest to the fact that infrastructure-wise, they were better than Nigeria, right? So Nigeria has been...
So it's on paper.
It's on paper, yeah.
Oh
I mean, we've not done it. I mean, think about it. Last time we did any major project in Nigeria was Third Mainland Bridge.
My God.
Okay, maybe in Lagos,
1992.
there was second Niger Bridge in,
in the east.
In the east, yeah. So that's in Lagos. Like that's the major infrastructure that we've done. You know, so think about it.
Right. All right. Thank you so much, Wahabi. It's nice having you on this platform, and I'll talk to you soon.
Yeah.